It's our Forex blog for July 15th, 2011. And like most days, we want to use a currency meter. I like to keep our blog posts kind of similar in discussion. We go over 50 other things in our regular classes, but the Forex blog just discusses our use of our currency meter and some of our other tools I randomly interject in there. Yesterday was a pretty choppy day, and today in many of the currencies, there were some really nice trends. Other pairs are a little bit more choppy than others. The CAD, you can see was extremely strong pretty much throughout the day. The New Zealand strong after 8 o'clock, and before that from 3 to 8 was pretty much weak. The Australian extremely weak across the board, and you can see the daily trend at 2 of the Australian was one of the weakest ones. The weekly trend was down, the monthly trend was down. So coming up to 2 at that point, the dollar was stronger between the dollar and the yen, and you might have wanted to sell the weak Australian against the strong dollar. Now, the downside of the dollar is the weekly monthly trend are down. In a perfect world, you want to trade one of these currencies like this against this currency that's has at least a weekly or monthly trend up. So you could also have traded the Australian yen at that point. That would have been a higher odds trade. But let's look at this one from 2 o'clock. This thing just absolutely collapsed. And you can see our IntelliStop currency meter, or I'm sorry, IntelliStop, kept you short until right here, somewhere in this bar right here. The dots went long. Actually, it was probably right around here. And then, it went short again, had a small 10-15 pip win after that. After a big move like that, you can usually expect either a decent pullback where you go short again, or many hours go by and you might have shorted it right here when it broke the lows. Unfortunately, that didn't result in much of a profit. It comes back to a decent pullback here. In effect, IntelliStop got you short right here at the perfect time. It missed all this choppy phase, got you short. This is real time. It looks different when you bring it up after the fact than when you run it live, and that made about 15 pips that second time. Let's look at the Australian dollar too, which are many reasons to sell the Australian dollar. First of all, when I leave the charts running overnight, there are certain tools that show up that don't, if I bring it up right before class. One of those is a narrow range pattern. Here you had a narrow range 7 4-hour bar, which means that previous 4-hour from maybe 6 to 10, the Australian dollar moved less distance than it did over the previous 7 4-hour bars. Pretty much an entire day's worth of 4-hour bars. And then you got, so basically you're looking to possibly take breakouts of this. The trend was up at that point. You might have got into the breakout right here and had a small loss, got into the breakout here and had a small loss. Maybe you're down 10 or 12 pips total. And then you have another narrow range pattern. So anytime you see 2 narrow range patterns in a row, it has a super high winning rate. And so when it breaks out right here, you can see it absolutely fell about 30 or 40 pips. And usually you can expect 2 waves on these kind of moves, so you draw your fibs off the first one if you wanted to hang on, and you get out the first or second fib target. I mean, this was just incredibly weak. But anytime you see 2 narrow range 4-hour patterns in a row, it tends to be a very profitable trade. Let's see if I can find any other double narrow range patterns. I mean, there's quite a few narrow range patterns last night. This one here, led to a trade. This breakout here led to a profitable trade. Here's another double narrow range pattern. Broke out, and you can see it went up about 25 pips. Unfortunately, not with a lot of strength. Double narrow range pattern here, broke out 20-30 pips. So when you spot a double range pattern, there's a single one which really had a false breakout here, then the market kind of chopped around. Anytime you have a false breakout double top like that, narrow range patterns that don't lead to trends when they break out typically reverse pretty violently the other direction. So you might have used our trailing stop to get you in right here, and it got you out all the way right here at the bottom. I mean, these trailing stops on the longer term charts work exceptionally well. And if you're afraid to pull the trigger on the longer term chart, you can now use the IntelliStop on tick charts. Let's scroll back in and take a look at this. On any big trending market move, it usually keeps you in for the vast majority of the trend. This is basically looking at all the different tick charts, all the different euro dollar pairs, and if there's a big move down, it's going to, usually just fall like a rock. This one kind of worked its way down in many choppy phases, so it wasn't the best example, but you can also use this for scalping. It started to break down, you have a pullback right here, you might have gone short here, lost a few pips, short here, made 15 pips. And typically anytime the market trends, if you're going to use this for longer term trading, you can usually expect 2 or 3 of these little mini waves to go down. So if you were going to sell this right here, and your goal was to hold for a little bit longer term, you might have got out at the second stop out area right here. Or if you see that right here, put your stop right above the previous swing high. Every time it gets stopped out, you might want to put it above that swing high. Here it got stopped out because this is a super tight stop for scalping. You got stopped out again here, and that's where you would have eventually got out. So there is ways to use it for longer term trading as well. Really explosive moves that don't kind of chop their way up or down, that explosively move one direction and keep moving that way. This tool's very useful for that. Like, for example, the euro dollar here, when it was trending up here, had a little bit of a pullback. I usually like to wait for at least 20-30 minutes sideways consolidation. Broke out right here at 40, went all the way up here to 60. It caught 20 pips because the momentum was there. It keeps you into the trade. When the momentum in the markets are really choppy, this is a very fast tool. Let's see if there's any other big euro moves earlier. This market's kind of chopping around. Here it didn't chop down. It kind of has a 1, 2, 3 pattern. You're short right here at 15. Kept you in down here to 98. So that was a 15 pip move. And previously on that wave up, you can see from 04 to 24. That's a 20 pip move. So while many times it'll get you in and out with 3 to 5 pip swings, if the move is real, and that's really what you want to know, if the move is real, it will keep you in there for 15 to up to, I've seen up to 30 and 40 pip moves, where even though it has a 3 to 5 pip stop, it keeps you in it. So getting back to the currency meter, I got a little sidetracked. Very strong CAD, very weak Australian. We don't normally trade this, but if you were to look to sell the weak Australian against the strongest CAD, just look at this trend. 200 pips straight down, and our IntelliStop does a great job of keeping you in. So you're short, out, another 20 pips, short, out, another 40, 50 pips, whatever. It's just a wonderful tool for helping you time the strongest trends. And when you have a currency that's this weak and another one that's this strong, don't use the tick charts for it. The tick charts are more for scalping, the low spread pairs like the euro dollar, dollar Swiss. Dollar CAD tends to be pretty choppy in my experience. Euro yen and pound yen when you're really moving. Maybe the Australian dollar, Australian yen at times. So again, starting the day off, the euro was pretty weak, or had mild weakness until about 4. Could have sold the euro against the dollar. Remember yesterday's blog post in class, we went over how the euro dollar had a 4-hour trend reversal sell yesterday, which means it was likely to continue its downward pressure today. So you knew that coming into today. And this one also had a narrow range pattern right here, starting the day off. It was underneath the hourly. It went sideways here for 2 or 3 hours, so this is a pretty high probability sell. And you can see our trailing stop kept you in all the way down here to 12, 41.12. I would have shorted it right here at 41.64 for a nice 50 pip move. Or if you're a scalper, you're short out of the trade right here, a little pullback right here, you're short again, it fell like a rock from 3 to 4, or 3 to 330. Very nice big profit that you kind of anticipated ahead of time. Now, when the euro was weak, you could have also traded that against the CAD. Euro CAD also very likely to have dropped. Now, the CAD really became super strong later, but once the currency breaks the hourly, you could have gone short, small profit, short, small profit, short, 30 to 50 pip profit. And when they get down underneath the lower containment band, it's more likely to reverse. So be careful. A little pullback trade right here in short. And also notice how well our IntelliTrend colored bars work, as far as the timing tool. And sometimes, it retraces, and if you got out of the close of the bar, you get back almost all your profit. Other times when the trends are real, it keeps it short the entire time. You see that? And obviously if it's underneath the hourly, you're focusing on sells, you're not trying to buy, and the counter trend moves are a lot smaller. Notice how tiny that is in comparison to this, how tiny that is compared to the next move, which made a lower low. When you're trading with a trend, the moves typically, if the trend's real, using our currency meter, they're going to move more than the counter trend move. You might make 10 to 25 pips on a counter trend move and 20 to 50 pips on a trend move. So that's it with our currency meter today. Remember also the New Zealand became really strong at 8. The dollar was pretty strong throughout the day, and so was the yen. You might have traded that against maybe the euro at 8, and the Australian was very weak all day. So you could have sold the Australian, New Zealand after 8. When one of them super strong and the other one's super weak, typically you have nice continuous trends, and you can see this one just fell, pretty much almost 100 pips. It's down about 90 pips or so. Beautiful trade. Forecasted by the currency meter at 8 o'clock, showing the Australian weak and the New Zealand strong, and that's what happens.